Hey, what's going on out there, YouTube? Pretty bad day on the market, except for the dollar. Looks like the dollar ended up just under 1%. The Dow and S&P closed down at least 1.5% to almost 2%. Pretty bad. So let's look at the charts. Here's gold. Had a bad day, down 2.5%. Coming on its daily chart here, just about ready to break down to the next level. I talked about maybe watching this thing consolidate, maybe make another stair step, but that failed once it passed the previous low, and it broke it pretty evenly. So looking to watch this on another level down. Same as silver. Here's some moving averages. Now, if I had a better system, I would use a simple moving average at 34 as my trend. You can see how on the daily chart these pops, and I put the lines on here because I thought maybe we can get a move over the trend line on the daily. As you can tell, here's an RSI with some Fibonacci numbers on it. You got the 13.8. Anyways, it came back. The elasticity came back to equilibrium, popped the trend line, popped over and came below the trend line, and then this is the bearish retracement on the RSI. So you can use the same philosophy, but it did go back to equilibrium again. Tried to consolidate just for maybe a couple hours of open market yesterday, today, last night, and I thought hopefully this can pop its head and consolidate above the 34, but nope. So we're looking forward to another down step. Definitely closed below 14, not good. 54.5 points down today, plus. It did poke its head down a little bit further than that. But still working on gold and silver. I'm going to catch this on a bottom. Alright, so the Dow and S&P, very, very bad today. Here's our failure on a daily chart. Let's make sure that it doesn't fail on a weekly chart, but it doesn't look good, does it? It failed to meet the new resistance line up here, failed, basically. And made a new low this week. So I would consider this very bearish. Same with the Dow. That is a very encompassing, and broke the previous low. Closed below the previous low on a daily. Another failure, and this could be portrayed as a double top on the daily. Let's just go to the monthly. Let's see how we're faring. Doesn't look good. That's encompassing the previous candle with a larger red candle, making a new low. US dollar was up, and was still looking at this long-term chart to see if it can get above the previous high. I think it's running out of juice after the interest rate hikes and all this hoopla about, oh yeah, the economy's good. Did gap up. This little gap needs to be filled sooner or later, so let's see how far I can get up to the previous high, consider it a failure, and watch it fill this gap on the way down. But we'll see. Anything can happen. Crude oil is still the one to watch as an indicator of how the economy is really doing here. It closed down 2.25% today. Pokes its head way below 35 and closed below 35. It did complete an indecision candle. Looking forward to making it down to 34.5. So it's almost down to the previous low. If it breaks that, who knows where it's going to go. Watching it because everyone's hedged. Countries, OPEC countries, banks around the world. If they can't pay the hedging on it, things will start to fail. Jim Willie thinks this is the trigger, and I'm going to have to agree with him. The dollar is not... It's only strong compared to other currencies. So, it just doesn't look good out there. We got 2 failures on the big markets, and, you know, timing these things, I have to say, is it's not the game you want to play. But on this larger pattern, we got lower lows, and lower lows. Or, excuse me, lower highs and lower lows. So it's rolling over, as they say. And this line, holding up the right shoulder, is very steep. And once it comes down to that line, there's nothing holding it up. So I would consider this watch out below kind of situation. Very dangerous when it gets up in here. So about 2,000 on the S&P, 26, 27 more points. It's going to hit this support line, but I gather it's just going to move right through it. There's not going to be any bump and run or anything. Maybe the feds are right to increase interest rates to let this thing crumble down and consolidate at a lower level. So there you have it. Let me know what's going on out there. Share, like, comment, please. Google loves comments. And I appreciate you watching. Thank you.